Welcome back after that short break. You're still tuned in to Energy 100 FM. And this is, of course, Econo Chat. Let's Talk Business with Mr. Daniel Steinman. You've heard the term capital market. Mr. Daniel Steinman has given us a breakdown of what it actually is. We will get into that topic right now. But in case you've missed out on previous talks, you've also heard a yield curve. You can tune in to economist.com.na and you can get an understanding what yield curve is and how we led to this talk today, that is capital market. So talking about capital market, Mr. Steinman, size and impact of capital market. But what are bonds?
Elsaby, the capital market is bonds. Bonds are the capital market.
There you have it. Simple.
Yeah. Now remember what I said? There's a short-term funding window. It's called the money market. It runs in quarterly cycles, 3 months, 6 months, 9 months, 12 months, but it never exceeds 1 year. And then there's the long-term financing window, which is the capital market. That's long-term. That's anything from longer than 1 year to 35, 40, 50 years out from now, very far into the future. Right? That is the capital market. And I explained where the concept capital comes from. It is the old meaning of money in the sense that is the working part of money. If you look at, so remember, money market is more short-term funding. It's more for like an overdraft, you know, when you have short-term liabilities. Capital market is more an investment platform, long-term liabilities. And if I say capital market is bonds, bonds are the capital market, it means that a bond is an instrument protected by law. So you have to have the power of a sovereign, meaning you have to have a legal government in place to make the laws under which you define a bond. So it's not just somebody standing on a little box there on the street corner and shouting, give me $93 and I'll give you $100. It's far more complex than that. It's regulated by the country's laws. And if you look at the word bond, you're probably familiar with the term bonded warehouse. And it means that all the stuff in a bonded warehouse, there's a certain guarantee on it as to its value, but also as to its ownership. It is protected by law. Now the same with a bond. It is, we call it an instrument. It's a financial instrument, or you can also talk about an investment instrument. It is defined very well, very clearly. That's why we call them GC25 or GC27. It's got a name, and it's got certain characteristics also defined by law. So it is legally protected, and those characteristics is what makes an investor decide, yes, I want to put money into that in the capital market, or no, I don't. So what I am promised as a return on the capital market, I want some guarantee that it's protected by law. And I want some guarantee that if there's a coupon value of, let's say, 8%, that I will be paid my 8% every 6 months. So let's look at size and impact. The capital market in Namibia is 95% government bonds. So it is government debt. So it's fairly easy to get to calculate the total government debt outstanding. You go to the stock exchange and they release these reports on a daily basis, and you look at all the government bonds. They listed, all of them are there. I think there's about 20, 21, right up to GC50. And there is a value that tells you so much has been issued so far, but there's a very important column there, nominal outstanding, and that indicates the value of the liability that exists for that particular bond. Does this now make sense?
Yeah, it does. It does.
Yeah. So the bond is sold in the beginning at a certain value with a certain ceiling, and a bond will feature on more than one auction until that ceiling is reached. Let's say 2 billion, just for argument's sake.
Yeah.
But it's not sold in one go. It is sold incrementally until it is sold out. Remember last week I said the bonds with the shortest maturity, you can't go buy them. They all sold out.
They already sold out.
They all belong to somebody else, you know. And there's a secondary market, but again, it's not a discussion for today. We can talk about that on a different talk. So there's about 75 billion outstanding in the capital market in government bonds. And then there's about, I think it's 3.88, let's say 3.9 billion outstanding for the banks. And there's just over 1 billion outstanding for the private sector, for corporates, but it's only 4 companies that have actually employed that power of the capital market to issue bonds.
I can think of who the companies are.
So the rest, you will immediately see that 75 billion is not 69% of a GDP of 212 billion. But the rest is the 38 billion that you short there is in money market, TB, short term. So long term funding is about 75 billion nominal outstanding. Which again, remember last week when I said at the end of our discussion, the government's debt, the Namibian government's debt is actually really tiny. It's not very significant, you know. Yeah, sure, you have to keep an eye on it. But if you look at where we're going, it is very manageable. It is not out of hand. And if you look at the actual values, GDP is 212. The long-term capital liabilities is 75 billion. Short-term liabilities is 38 billion. Elizabeth, that is not a train smash. That's just the beginning of our development, and we need
things.
that money, and we're going to need 10 times more money than what is currently outstanding. You see, so the impact is that the capital market is the biggest driver of government funding, and the government pays 160,000 people salaries, and it is busy in development projects, and it's building infrastructure. And you know, if you would have told me that the road between Gubabas and Aminus will be tarred one day, I would have laughed.
I would have been with you on that one.
Yes, but now I've been there in December, and my mouth fell open. I thought, what a fantastic road, you know.
It's a beautiful road indeed.
Yes. Now that is funded from the capital market. So can you see the very big importance of the capital market to keep the government's investment and the government machinery running?
Yeah, I can see that. And with that said, let's quickly go for a short break. And once we come back, we continue with this very interesting talk. And of course, we will get into the credibility of capital markets.